Good evening, everyone. It is a beautiful night on August 12th, 2020. My name is Faisal. I'm the head equities analyst at Alpha Trades. And basically, I'm going to start doing these Wednesday videos, maybe Friday videos by myself in the future. And the goal is to give you guys a market rundown of what happened during the day, and then potentially give you three stocks that should be on your buying radar, and then also go over three stocks that interested me throughout the day. So we're going to go ahead and go with that formula from now on. I hope it'll make things a lot more clear for not only viewers but myself. I know I can go on and on about a topic, especially in the financial space. I can just talk forever. So hopefully this will keep me a little bit more organized and cut the content down to a point where you guys get a lot, but it's not too much. So with that being said, let's go ahead and start with the market rundown of the day. So today, it started off as a really great day for the value stocks. If you want to take a look at the screen, sectors like the financials, this is XLF. We're doing really well this morning. Let's go ahead and just take a look at a 15-minute chart. It actually opened all the way up here at 25.23, then sank pretty much 2% by the end of the day. So as you can see, it opened all the way from the top and just really sunk throughout the day and closed at the lower half. Same with XLI. Kind of had a strong open, close at the lower half of the day. And XLE, let's take a look at that. Opened very high, closed at the lower half. So value had a really nice morning today, but ultimately the gains were mostly given up by the close. And so it wasn't really that good of a day. On the other hand, tech had a really nice bounce back day. And I know if you guys had read my note from last night, I had touched on the fact that tech had actually held up very nicely during the sudden sell-off yesterday near the close. And it was because of that I expected a bounce back, at least today, in tech. And we got a really nice one. XLK, for instance, which is the general tech ETF that I look at, was up 2.2%. I think the NASDAQ overall was up 2%. But once again, it's not all about the generalistic numbers, because when you look at the tech sector and high growth stocks from a broad perspective, it was actually the biggest cap stocks like Apple and Microsoft that ended up accounting for most of the gains in the NASDAQ and across the tech sector. So even though the headline number looked good, it still wasn't that great of a day for tech, in my opinion, and especially high growth stocks. You did get bounce backs here and there, like Zoom was a high growth leader that had broken down yesterday, but it ended up closing, I think, up 2.5%, and hopefully can start to recover from here, because if it starts to break down lower than the low it made yesterday, that's a very bad sign. Zoom has been a very telling stock throughout this entire recovery. It's still a leading Corona Advantage stock, and I really don't I could see it consolidating from 230 to 280 over the next 2 weeks, 3 weeks, maybe month. But if it starts to break down below this 230 level, oh boy, that could be really bad for the high growth stocks in general. But overall, I like what I'm seeing from the majority of my high growth leaders. They look like they want to bottom out, or at least have a stronger bounce day than they had today. So that's something to look forward to throughout the week. And if you guys followed me on my alerts, I had actually bought into high growth today after staying away for so long. I covered my coupon and went long Alteryx, AYX. It's a data mining and analytics company, and they're really a premium data company, in my opinion. And they really got killed on their earnings. Said a lot of softness was going to come in the future as a result of the virus. And while that may, that may be a concern, the stock has dropped more than $70 from where its high was 2 weeks ago. So at this point, I guess you can kind of say it's been discounted in. At least that's what I thought. So I had taken a position at around 107.80. So yeah, this is a stock that I'm in. I think it's gotten way too overkilled, and this is kind of going into one of the stocks that interest me today was, AYX. It's a really great company. Was very good before it reported this bad quarter that it just got annihilated on, and I continue to be a long term believer in this company as big data continues to expand, and especially with the emergence of 5G, that's going to be enormous amounts of data because everything will be connected and live data. It won't be necessarily a ping type of data or something like that. It's going to be consistent and enormous. And so if you are a premium data company that also uses AI and analytics um, to deal with more complex data sets and such, because I think we're going to get a lot more complex uh, type of data in the future as data sort of expands and becomes more precise and defined. You need companies like AOX to really help compile it and use that data properly. So once again, I'm very much so long this company, um, and I bought into it today. So on to the next stock that kind of interested me today. I got a couple questions in the Discord about this position, EVER. I've talked about EverQuote for I want to say a good 2 weeks, and I finally bought into it either last Friday or this Monday, very recently over the last definitely 5 days. So far, it's really been a bad position. I got into it at around 41 and a half, and it's really just kept sinking. And some people are kind of wondering whether or not this stock has really peaked out, or whether or not they kind of bought it and there's still more room to go down, because in my opinion, it's still a disruptive company that got cheap, but if price action continues to go the other way, then that just means a stock that's cheap can essentially get cheaper. And so as it continues to bleed below $40, that's making me a little bit nervous um, in terms of holding it at this point. And so over the next maybe 2 to 3 days, I expect this stock to bounce up from here. I don't think it should make a lower low than it did yesterday. Um, I really do, just based on the short-term technicals, it should hold up from here. But if it starts to break down below there, I may end up having to cut this stock, which I love so very much, and hopefully get back in at a lower price, hopefully around 31, $32. So that's my game plan for this stock. And once again, the price to keep an eye on for upside momentum is 41. If it can break above 41, that's when I think you'll have this stock rally somewhere close to around 48, $49 in a week, 2 weeks, and it'll show you why it's a great company. So keep an eye out for that. And then the last stock I want to cover, I think I want to go with Citigroup. So Citigroup is a company, I just got into it today. Um, it's one of the main value stocks that I've been not recommending, but definitely had my eyes on. I played options in it last week. That turned out, I don't think they turned out well actually, but still the move was fine. It went with my move. But anyways, I got into the stock today, and I still think that value has more room to run. So Citi, once again, is one of the premier picks. I think they had one of the best earnings reports this quarter when talking about the big banks. As you can see from this chart right here, it shows a history of their EPS. And so while they're going to make $3.18 now, which is a near 60% decline, they're expected to bounce back in 2021 to make $6.37. Now that's relevant because the last time they made close to that amount, along with, I think they even had better revenue growth, or it was getting better. I think, obviously this quarter was bad, but if they can have consistent revenue growth, maybe upwards of 5%, they should be trading somewhere close to where it was in 2018, maybe 2017. Just based on how much EPS they had that year. That's one of the factors that I use to determine whether or not a stock is valuable based on its EPS, its current EPS. You just got to look at it relative to the history and how it trades. So back in 2017, 2018, the stock was somewhere around 60 and went all the way up as high as 75, 76, I think 80 actually. So it can go somewhere around there. I think maybe at the lowest point, it could go to 56, 57. But either way, I believe this stock is still very undervalued. And as long as value continues to show these signs of rotation and buying rotation, I think I want to be in names like Citi that really look fundamentally undervalued, even though there is ongoing risks. It seems like those risks have been somewhat priced in. And so now if I'm betting that value is going to have a great week or 2 weeks, I think this is a name that is definitely worth buying into. So that's one to keep an eye on out on if you aren't already in a value name or anything like that. Okay, so now we are on to 3 potential buys. So first and foremost, as you guys know, I did cover my high growth short and I did go long. So I also want to give you guys another high growth stock that's on my radar, but it's one that's more solidified and one that I was close to buying instead of AYX. So CRM was one that showed a lot of good internal short-term strength and continues to look really good on the estimate side. As you can see, 2021, they are declining a little bit, but there are some declines for 2020 and 2021 when you look at the software space, but it seems like most of them are still, I mean, they're still holding up fine. The key thing is that in 2022, estimates are expected to jump up by 20%. And the key thing is revenue growth continues to stay very high and actually is accelerating and could see further acceleration as SaaS becomes more integrated in more companies. So CRM is one that is really just, it's a premier company with very little debt. They have high cash generation. They have very solid management. And so I'm probably looking to pick this one up sometime soon if I start to feel more comfortable around tech. And then, okay, so on to our next stock. Our next stock, I think, is in the oil sector. So I've gotten a couple questions about what is the strongest stock in the oil sector. And to be honest, I really can't say. I'm not going to act like I know what's the best stock to play in terms of just based on the fundamentals, because I don't have that good of an understanding of the current changing factors, nor do I have a good understanding of how oil stocks have traded during periods such as this. So I'm not even going to go there. That's why I'm in, usually if I play energy, I play XLE. But I will say that Pioneer seems like one of the stocks that not only is showing different EPS growth and decline compared to the other companies. I don't believe they're declining as much on revenue. Sure, on earnings they are, but their earnings bounce back is, I believe, much higher in 2021. As you can see, they're going to bounce back a 149% rate to $3.51. And if we go back in history, the last time they made somewhere close to that, so let's go ahead and say 2017, or even you can go to 2013. Let's just see. 2017, they went all the way. They were at the low. They went to, wow, they went to 125, and then 2014 they also went to 106. So they're close to there. I think they can trade somewhere above, just based on if value continues to go up. I think they can go somewhere close to 120, 130, because when I look at the short-term technicals in the oil space, I think PXD is probably the best one. And I've been a fan of EOG and Chevron and Fang as being my go-to oil stocks, but I think Pioneer is really deserving of my attention. And if I start to feel more comfortable about energy in general, I think PXD will be the premier name to play, especially because their reaction to their earnings have been good so far compared to the other oil stocks. And I think the estimates are looking just, I mean, they're fine compared to the other oil companies. Margins are still good. They have a lot of good surprising metrics that I think once you dive into it'll look much better than most of the other companies. Once again, I'm not an expert on their assets. I don't really know that much about the Permian or what the future holds for that side of oil, but that's just my take based on the technicals and some of the historical fundamentals compared to now. So PXD is definitely one that I would keep an eye out on in the oil sector. Last but not least, I want to go back to the software sector, but one that is a little bit of a safer pick as well, but also has more high growth. It does remind me a little bit of a CRM in terms of it offers growth and safety. But this stock has pulled back, and they have a really safe customer base because I think they get like 80%, 70% of their revenue from the government, the US government. So that is a very, very good client to have when you're a software business. And they primarily specialize in a lot of this collaborative software. They do multiple things as far as bringing government departments online and connected through a cloud interface. Tyler Technologies, TUIL, has pulled back quite a bit, but the estimates still look great. You know, as you've seen with a couple of other software companies, 2020 or 2021, the estimates are usually coming down. Like, let's just say, for instance, you know, right here, see for Tyler, they're actually going up, but, you know, let's just see on Coop, you know, they're coming down for 2021. Same with, let's go back to CRM, they're coming down for 2021. Let's go to, what's another, let me see, Blackline. Oh, Blackline is good. Let me check out CyberArk. CyberArk, so they're coming down for 2020. So there are a couple, you know, the estimates are coming down in a couple of these software and high growth stocks, but for the most part, when you can find a company that is still growing now and not expecting to teeter off and actually accelerate once again in 2021, that's very rare. And for a company that has no debt, you know, and really strong safety factors built into it in such a risk on and risky environment, I think it really is a unique asset and one that I'm looking to get into because of its safety and its growth opportunities as well. So I don't think the government is going to cut back on spending in terms of trying to become more technologically advanced. So I'm still very, very bullish on the stock that truly capitalizes on that as much as Tyler Technologies does. So this is once again one that I'm keeping an eye on. I think it's pulled back more than enough and should start to show bottoming signals sometime by the end of this week or definitely next week. So that's the last stock I'm going to keep an eye out on, or that I'm hoping to get into sometime this week or next week. And that about wraps it up for tonight's video. I hope you guys enjoyed it. If you have any other stocks that you want me to cover, just send me a DM and I'll go ahead and hopefully touch on it a little bit. I don't know if I have a certain segment, if I get big enough for like a little request line, but for the most part, I'm just going to kind of stick with what interests me and some of my positions that I have. And then hopefully down the line, we can get some more feedback from the audience and get some of y'all's questions answered. So I hope you guys enjoyed this video. Please take care and stay safe. And I hope everyone enjoys the rest of their evening. So take care and thank you. Peace.